All right. So can you give us an overview of the business for Abbott Labs? I'd be really curious to know more about the company.
So they are into four segments. You got the pharma, which is generic drugs, basically. You have medical, which is going to be medical products for adults and kids. Diagnostics. So this is a support for science, basically. A bunch of laboratory systems similar to companies like Danaher, which I've done a video on in the past, and Thermo Fisher, and nutritional, also for adults and kids. You can see the breakdown there, powered really greatly by the medical and the diagnostic.
Yeah, that's very interesting. So I guess tell us a little bit about the financial situation of the company. How are the financials?
Yeah, so they're, decent returns on capital. It's kind of up and down because they are a drug company. They do rely on some of those drugs to go through FDA. Revenues have been up 8.5% this year, and operating margins around, call it like 12% over 10-year period. So not as big as some of the other players in healthcare, but not like a super low margin business either. They're kind of in the middle of the pack there.
Yeah, the stock return looked pretty nice over the last few years, so that's awesome.
Yeah, it did. I mean, over 200% over the last 5 years. And this despite, not crazy growth either for EPS or revenue. So, back in the last recession, they really saw drawdowns in all their financials. They've made a comeback ever since. And so that's probably why Wall Street's optimistic.
All right. Well, that kind of leads us to the next question. What are they worth? So, what's a good intrinsic value for this company?
So I ran two places here. So this is our from both tools from our little package of valuation spreadsheets. This is a free cash flow of the firm model. So I took again that trailing 8.5% revenue growth, some operating margin, tax rate, those are kind of straightforward. For ROIC, I took the latest ROIC, and I took a cost of capital from a company called Finbox. They have a website, and it came back with a fair value of 126.31. So if we compare that to the current price, they just closed at 135.96. That's probably a good parameter for how Wall Street's viewing it. You can see how the way we do our spreadsheet for the free cash flow of the firm, the revenues start where your projection is, and then they tail off as time goes on. So particularly for a company like this, I mean, that's kind of a nice estimate because, like I said, this COVID stuff probably will last for several years, and then it could tail off over time. And this company's valuation is really, really tricky, even compared to other companies, because as you change this ROIC and their cost of capital, you get huge swings, especially with the cost of capital. I mean, Guru Focus said their WACC is a 5% right now, which if I were to plug it in here, you can see it like triples the valuation.
Valuation.
It was a reason why I just decided not to go with the Guru Focus WACC, and I used the Finbox WACC. But they have that low beta, and it's making their cost of equity appear low if you use that beta, and it probably has to do with the fact that their stock price has been so hot lately. I also ran it through our free cash flow, the equity, and this is in the IFB equity model. Again, both tools available on the little package of valuation spreadsheets. And I came up with a value of 95.75. So that's kind of where I think most likely the company is at. Did a higher cost of equity because to me, I just their cash flows are so volatile that it's hard for me to project a lower growth, lower discount rate, even if that's kind of what the market's expecting. So could be overvalued, could be fairly valued, depending on how you look at it. And that's kind of the story right now with Abbott.
It looks to me like it's pretty close to maybe fair value to overvalued. If you kind of merge those two valuations together, that probably looks like a pretty reasonable assessment.
Yeah, I'd agree with that.